Good morning, everybody. Kirk Spano on Monday, October 21st, 2024. I'm sitting in the library at the Hilton Queen Creek in Arizona. All right, we are going to do a very quick take on the markets and then a stock that I've been accumulating for a couple of weeks that had been off our radar for about 2.5, 3 years. That's back on the radar and pays a nice fat dividend for you retirees. But it also has some good option premium for right now. And I think has a lot of upside with very little downside, which is the magic formula. All right. So Goldman Sachs says the decade of big S&P 500 gains is over. I think that they're a little bit early. I do, even though we have pretty high price to earnings ratios and a pretty high price to earnings to growth. I think the growth rates are understated, and I think that the margins are going to continue to improve for companies as they apply AI. And since we don't have a recession on the radar, not quite yet anyway, I think that we are probably going to do all right in stocks for a while, although there will be more volatility like we're seeing right now. Volatility has shot up. We're down on the day for the market. That means that option selling is ripe for capturing premiums. You can sell cash secured puts and get fat premiums. You can sell covered calls and get fat premiums. Really, the puts are what's getting the fat premiums right now. So the stocks that you want to accumulate this week and next week as the buyback blackout ends, you probably want to take advantage of the buyback blackout now to get some of those better prices. But I'll get to that in a moment. So insiders are selling into the great bull market of 2024. Most of them have prearranged plans. They're not doing it in a discretionary fashion. So they're just trimming as a matter of course. That usually lasts for 2-ish years before you really see a substantial correction. And I think that more likely it just points to rotation as chief executive officers at certain companies cash in some stocks over a couple of years, then they, go to a new up and coming growth company. So you have your CEOs and executives just like where they are, your Jamie Dimons of the world. But then you have others who every decade or so they switch companies because it's a new, better deal for them financially. So I wouldn't be too spooked by the insider selling until it's really gone on for a little bit longer. So you see that they weren't really selling in 2022 when things were cheap, and then it's gradually that number has gone up. And 2021 really wasn't that high, relatively speaking. They cut these charts off too soon. You really want to go back to, at least for this particular chart, you want to go back another 10 years, and then you see much higher periods of selling, especially going into the financial crisis. So we're not quite there yet on the big insider selling, but it's developing and we should keep an eye on it. The big thing that I always tell you about is employment. As long as employment stays good, you're going to continue to see people putting money into retirement plans, and that will support the stock market. Carson Block, who is a pretty famous short seller and a good one, he and I agree on a lot of things. And one of them is that shorting is hard. One of the things that he says here in his reflections on his career is I probably could have just been a long only investor and done just as well, even though he's been a very successful short. So think that through. One of the best short investors of our generation is telling you it's so hard that you're better off just being long most of the time. You have other short investors who have also said that recently. So, when the short investors are telling you that it's really hard to be a short, they're partially, trying to keep you from doing it so they can find better deals. But I think they're also telling you the truth. People who ask me, what should I do to hedge? My answer is usually what? Who knows the answer? What do I usually say when you ask me about what's the best hedge? I say two things, right? Number one is cash. And then occasionally, a few times a decade, when volatility gets really, really low, like 10 or 12 on the VIX, then you can buy volatility. But other than that, shorting good and great companies is just a fool's errand because the upside surprise potential is so great. When people short stocks like Microsoft or Apple, I just laugh. I'm like, it's just a bad trade, right? You're trying to be perfect, you're trying to be cute, you're really being arrogant. And to say, oh, well, my indicators say blah 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 blah, Microsoft is going to suck for 3 months. Man, that is just such a bad bet. Look at the chart. It's been a bad bet over and over and over again to short the big companies. It's just really not worth doing, given the risk of losing your entire bet. So why bother? Right now, we should be holding 20 to 40% cash, which is typical. Depending on you, you might have 20 or you might be 40. If you're a retiree, you're probably closer to 40, but you have a whole bunch of cash secured puts sold against that cash. So your return on that cash, on an annualized basis should be 20% or higher in most cases. And that's really what I target for an annualized return on cash secured put selling is 20 to 30%. Every now and then you get a little bit higher, but that is indicative when you get such a high premium, that usually is indicative of more risk. We don't really want to reach out for risk almost ever. So, think things through. We are probably in a situation where $1 trillion or more is released into the economy over the next year or two because of the money coming out of money markets as interest rates fall, as bank loans get more favorable, as developers develop, as businesses invest in their businesses, especially as they buy AI or they buy new machine learning technology. So for the next few years, whoever's president is going to have tailwinds. And the question becomes who breaks it? Now, I don't think Kamala breaks it. I don't think she is going to be awesome by any stretch of the imagination, but I think she'll be good. Just like I thought that Joe Biden would be good and proven that, the proof is in the pudding, right? The economy's good. We had a little bit of inflation because of the COVID related supply chain disruptions and then the bailouts that maybe were a little bit too big. But again, as I point out, probably were too big on purpose because it helps with the baby boomer crisis that we're going to have 5, 6, 7 years out. And now you take a look at the reality of the world and you're saying, in the United States, it's pretty good. Now, the rest of the world, it's different. They don't have the growth we have. They don't have the technology that we have. They don't have the protection of oceans that we have. The rest of the world is just not as good of good of a situation as we are geographically, but also rule of law, security, technology, capital, immigration is actually good here. People say, oh, it's illegal immigration. Well, whatever. There's actually a passage in the Bible that tells you that, you shouldn't be so fired up about it. You're supposed to be gracious when people come to you because there's a reason. And the reality is that we have the ability to grow our population at will whenever we want, but people always want to come here. And that's good as aging demographics are very deflationary. And we can say, look, in order to continue growing the economy and getting tax receipts and paying our bills so that the baby boomers don't starve and, have to eat cat food, we can just say, okay, we need 5 million people to replace the boomers that retired this year. Oh, we need 3 million people to replace the boomers that retired this year. We can do that at will. We should do it better. Clearly, obviously, I don't think anybody argues that we're getting to where we need to get to, but it's very sloppy, it's very ugly, and it's not controlled, and that can lead to some bad outcomes here and there. But one thing to keep in mind, the FBI puts out statistics. The crime rate among illegal immigrants or undocumented immigrants is less than half the general population. It's something like 20, 30% of the general population. So, they don't commit crimes. And why would they not commit crime? Pretty obvious motivation is they don't want to get caught and thrown out of the country, right? So, we've kicked 500,000 people out of the country in the last year. The deportation rates are very high, historically speaking. It's just that we also realize at the government level, we need all these people as employees. Otherwise, we'd run into labor shortages, which we had for a little while. And now we can take a look at things and go, okay, what is this big picture looking at? What's really shaking out? You have a lot of economists out there to take that Austrian mindset, which I've warned you about. It's wrong. It's been wrong forever. It will continue to be wrong. There's not going to be a magical change in that philosophy that suddenly makes it right. The reality is that the United States can completely operate on a Keynesian basis for a very, very long time, probably forever. And that means that the debt really isn't that big of a problem. Can we make it a bigger problem? Sure, we can. But debt as a percentage of the GDP is actually gone down when you take out the interest expense. So it's not that the budget is overspending. It's that we basically stopped collecting taxes on a group of people that should be paying more in taxes, and those are the people like me who can use carried interest, who can use capital gains, who can use real estate deductions in a way that lower our marginal tax rates to lower than what a teacher or a doctor or a nurse makes. And it just really doesn't make a lot of sense. The capital formation idea, there's a theoretical argument there that you need low rates of taxes on capital, but really, because we are in a low tax regime, compared to the 50s and 60s, you pay much lower taxes as a percentage. You're splitting hairs when you start talking about 25% tax rate or 28% tax rate or 21% tax rate on capital gains. At some point, I think over $1 million a year, it should just be income. And that way, you don't have all these loopholes that get exploited by people that can afford to use the loopholes by hiring an army of accountants and lawyers that actually pay for themselves by getting rid of taxation. So when we look out over the next few years, the economy looks really good. How that turns out by the end of the decade, your guess is as good as mine. I think that we run into some speed bumps once this building boom and business investment boom is over. And hopefully, we are not in a position where somebody has done huge tax cuts and driven us even further into debt and broken the back of the debt camel. Because right now, we can handle what we are generating in debt. And in fact, with lower interest rates and high employment and high tax receipts and a growing stock market and growing real estate markets, it actually all starts to pay for itself in the 2030s and I call it attrition, but it's really boomers start to die, as they start to weigh less on the federal budget sometime in the 2030s, then all of a sudden things can get substantially better on the debt situation, which is why I look at the debt situation and it doesn't whack me out. I just don't see it being that big of a problem unless we do something weird to really add to it in a bad way. All right. So Carson Block says, close your eyes and buy big cap US stocks. And I say basically the same thing in my article today. We pretty much want to invest in the two parts of our barbell. Well, I'll get here to in a second. Right now, we're at the buyback blackout. We're right here. So in the next week or two, you'd expect volatility and then into the election. And then once we get some absorption of the election, and if Kamala Harris wins, I think the market is going to have some angst. You'll hear people going, oh, it's the end of the world, and it's not going to be. It's just going to be a rotation into clean energy stocks, which is why I want you to get out in front of that, because I do think she's probably going to win. I haven't worn my mask yet, so it's not official, but I do think she's probably going to win. From what I can tell, she's going to win Georgia. She's going to win Pennsylvania. She's going to win Michigan. She's going to win Wisconsin. That's enough. I'm here in Arizona right now. I think it's a coin flip. I will say I've never seen so many political signs out. And some of the signs are just so blatantly unfactual. I mean, actually on signs, people write on a board and they put it on a corner. I can't believe that there's so many stupid signs here in the greater Phoenix area. In any case, buyback blackout ends going into November. So I think that by options expiration in November through the end of the month, you get stabilization. And I think that December probably rallies unless there's some sort of international event, which there could be. But I think that those are buying opportunities more than anything else, or sell cash secured puts when the premiums are high. So our barbell needs a little bit of updating. So I did this back in 2019 or 2020. So on one side of the barbell, you've got tech and communications, industry using tech. And I should have just put fourth industrial revolution here, right? Fourth industrial revolution is important. Consumer discretionary, if you can figure out what brands are going to be hot for the next 5 years, buy them. Clean energy and biotech, which just has started to rebound. You have your REITs on this side, gold and crypto, and it really should just say Bitcoin and Ethereum, because what was our theory that whole time? Our theory always was that Bitcoin and Ethereum would be the dominant players and that almost everything else would go to zero. It's turning out that Ripple and Chainlink and a few others are going to survive because they'll have special uses. They might integrate or fork back into Ethereum. We'll see how that works out. But Bitcoin is different than the software as a service replacements. Bitcoin is digital gold. Everything else is a software as a service replacement using blockchain. So they're different sorts of things. Interestingly, Bitcoin has waded into the software as a service replacement because of the way they've built that they can start doing a lot of the things that Ethereum does. And the other currencies or the other cryptos really haven't taken on the digital gold aspect that Bitcoin has. So Bitcoin's one. Bitcoin is digital gold, and that is how you should think of it. Materials, I'm not a big believer in CapEx dependent companies because they're just always running into an expense and it's hard for them to really grow or maintain margins. But there are cycles that you can play. And when you get a recession, you can generally buy all the materials companies and make 300% on your money in a few years on the rebound. I only really see lithium in that category right now. Lithium is cheap, and you have a few other things that are fairly priced, but lithium is the only one that I really, really like. Potash. Potash is on the verge. I think that potash is probably going to be worth looking at soon. So that means Nutrien. And the last time we were in Nutrien, we tripled our money. I actually started an article over a year ago. I've shown you my list before. It says, can we triple our money in Nutrien again? I'm not sure that the answer is yes, but I think you'll be able to double your money in Nutrien. I think it does get to around $100 again. It's just a matter of how long does it take. But potash and fertilizer is going to be incredibly important, especially as we continue to lose arable land, and that's important that we figure out ways to save it. And fertilizer is one of those ways. Alt energy, we had talked about the yield codes. They have proven to be bad investments, with the exception of really Brookfield Renewable, because they have that hydro energy base and then other alternatives. So this barbell has proven to be pretty prescient. It has been the way to do it. You want to own the big companies, and you want to, so the other way to look at the barbell is you want to own the big companies, and you can almost index. QQQ is a good way to go. And then on the other side, you have XMMO, right? You have the momentum-based mid-cap fund. And why is that? Why does that make sense? Why does it make sense you'd have a mid-cap fund that is based on momentum? Well, if somebody knows the answer, it's a pretty easy answer. What happens to mid-cap funds or mid-cap stocks that are growing? Where do they get sucked to? They get sucked towards the S&P 500. And as they go from 10 billion to 15 billion to 20 billion in profitability, they get sucked towards the S&P 500, and that generates momentum. So the momentum-based mid-cap fund, XMMO, has beaten the S&P 500. It's beaten almost everything except for QQQ. So between QQQ and XMMO, you're in good shape for your mid-caps and your large caps. And then you pick out over 20 or 30 companies on the high end to add some alpha to your portfolio, because you're going to look for lower risk opportunities that have the ability to potentially have some big gains. So let's get to the one that I want to talk about today. Sirius XM Holdings. It is a company that was on our radar years ago, and I think we were just early. It had a pretty substantial drawdown. The symbol has changed, so the chart doesn't really show what it is. However, it's had about a 50% drawdown in the last 3 years. And now you have to take a look at it individually and you say, okay, why is Berkshire Hathaway buying roughly a third of this company up in the market over the last couple of months since it merged with the Liberty Sirius stock? So now instead of having a Liberty Sirius and then a Sirius, a tracking stock with some other stuff, and then Sirius, it just is all one thing. It's Sirius. And what's attractive about it? Well, first of all, they have a billion a year in free cash flow. Hugely profitable company. They're paying down debt. They're buying back shares. Somebody says we were buying it around 6. So yeah, but that's split adjusted. So the reality is that I forget what the split was. It's still down 40-ish% from its all-time high. However, when you take a look at the company itself, you have $1 billion of free cash flow just on the reduction in capex and the reorganization of the company. It probably gets to 1.4 billion 2, 3, 4 years out. And that's without any growth that we don't see. Here's the thing. I think there's a lot of growth that could happen. We have huge pent up demand for new cars. And I think that, and the vast majority of them have Sirius on board. I think that you're going to see a lot of people turn on the Sirius subscription. They've changed how they model their services and the fees that come with it. If you want more of a streaming service, they have it. If you want just music, they have it. If you want everything else, they have that. So they have different tiers. I think it's going to be wildly attractive to people as they compare it to Spotify and Apple. I have Apple Music, and honestly, there's a certain amount that I'll probably download to a hard drive because I have that right. Well, I'll probably get rid of Apple Music and I'll just use Sirius because then I have this. I don't like using 3 different services, right? I'm getting old. I don't want to do that. I want just one thing. And Sirius can be all those things. It can be streaming, it can be satellite, it can be on your phone, it can be wherever you want it to be. And for $20 a month, which is, or maybe I think 27 is their super high-end service. You can get everything. You get streaming, you get Howard Stern if you want them. You get all the podcasting. They own SoundCloud. They own Pandora. So they really have everything. I think that you're going to see them blow through the 1.4 billion of free cash flow. Their dividends already 3.85%. The payout ratio is only 30%. The debt is coming down. They buy back shares from time to time. There's a reason why Berkshire Hathaway has been buying up this company. They own 31-32% right now. The whole market's down today, and this one's holding up. That means somebody's buying it. So I've been selling cash secured puts aggressively on this one the last 2 weeks. I've sold November 24s. I've sold December 26s, and I'm going to sell January 27s or 28s. I'm not really sure yet. I will do the option expiration update sometime this week between appointments, and I will get that up. But I would take a starter position in Sirius. Anybody can take a starter position, growth investor or retiree. And I would start selling cash secured puts aggressively. Start with the December 26s and then add some January 27s or 28s. On the dips. I think we might get some dips through roughly the election. If Kamala wins, you might get a rough November, but then it'll be off to the races. And the Kamala trade is clearly a pivot into small caps and clean energy in particular, but companies that benefit from technology. The whole argument I've made about industrial companies that use technology well, right? Industry that uses tech well. This is not a new argument. This is 4 or 5 years ago, I told you to think about this. The fourth industrial revolution, the companies that use that technology well are going to see their margins improve by 20-30% minimum. And their margins could improve 40-50%. In some cases, companies are going to double their margin. So really think about that. You could have companies that all of a sudden that P to E to G ratio really contracts. And it's because it's justified. So a high PE ratio right now might be justified based on what's going to happen for a lot of these companies in the next 3, 4, 5 years. So keep that in mind. Just because we do have a historically high PE ratio, ask why. Well, it's because earnings might go up a lot in the next 3, 4, 5 years. Well, hopefully we have grown enough and we do some smart things politically that allow us to mitigate the demands of the boomer retirement, the Social Security and the Medicare and some of the other things. And if we do, we're in great shape in the 2030s. Now, if for some reason we decide that we just want to cut taxes on the super wealthy and then do pretend tax breaks on, people with tips and overtime, well, then we'll run up a gigantic debt that really doesn't have a way to pay for itself, and it'll dig us into a hole that we'll have to dig out of, and we'll be able to. It'll just be a pain. And Trump will blame the next guy, even though it's his fault if he happens to win. But, hear me now, believe me later. If you're voting for Trump, I'm just telling you from an economic standpoint, it's a bad decision. I'm not going to argue any of the other stuff. I'm just saying from an economic standpoint, it's a bad decision unless your whole mission is to short the market into oblivion and get rich on the next big short, because I think that's what would happen. You're going to get a spike and a crash if Trump wins. And like I said, hear me now, believe me later. And if you want to vote for Trump, go ahead. I'm not going to disparage you. I do understand a lot of your concerns. I'm just telling you you're wrong about the economics. He's not a good businessman. As a guy who gambles, I will tell you, anybody that can bankrupt a casino is a shit businessman. So in any case, somebody asked about Sirius incorporating AI. Yeah, everybody's incorporating AI into their services. In fact, their new receiver collects data and they parse it out using AI so they know what to try to sell you. So, Sirius is in good position here. I do think that you should own it. I don't think it matters if you're a growth investor or retiree. I think you should be scaling in over the next 2 weeks to 3 months and I'm getting a full position in this one. I've waited 4 years. And that's the thing. When you buy stocks and it doesn't go well or you have to wait for it, people are like, oh, it didn't do good the last 3 years. Well, but you knew that it was going to take time. And really, the Sirius XM merger has been one of the most successful in history. This is why Dish and DirecTV, that's going to end up probably being pretty positive too. So you take a look at mergers like Sirius and XM, and what you realize is that they've created a near monopoly position on the satellite radio, and that's a big deal. The idea that you can stream everywhere is only partially true. Even with AST Space Mobile up there are very strict limits on the amount of streaming you can do unless you pay a very high rate, right, at the institutional level. So what you're going to be able to stream on AST Space Mobile is going to be relatively low, right? You'll be able to do a phone call. You'll be able to do emergency stuff. If you have to stream for a minute, you'll be able to stream for a minute. But it's not like you're going to be able to play video games and, download a bunch of movies using the satellite services because they just don't have that capacity. So, they're really to fill the gaps. That's what the satellites are for. But given that 3/4 of the planet is a gap, there's a use case. So I think Sirius is interesting, not only from the standpoint of the communication, the radio and the podcasting and SoundCloud and all that stuff. There is a use case for Sirius as a communications directly to your car. So if you do have a problem in your car, think of what's that thing that GM had or has. They changed the name, but the OnStar. Sirius has the ability to do that too. And that means that a bunch of the car companies don't have to set up their own networks. So they'll just put their service provider through Sirius if you need service, right? So they can create a communication platform using Sirius and the new receivers that they have that have been going into all the new cars. So there are, and take a look at their collection of assets. There's one article in here that's worth reading. I think the guy's name is Curian. This value portfolio guy is a knucklehead. This guy is a knucklehead. But this kid here, Curian Research, it actually is a pretty good piece. So if you don't have Seeking Alpha Premium, this is I'll point to the ones that you should read. I do think you should have Seeking Alpha Premium, and you can go get it in my toolbar. Just use that link and you'll get a discount. But he does a pretty good job explaining the company here. So if you're going to read any of these articles, this is the one to read. The Sirius XM to offer the cheapest in-cars subscription ever. And remember, they own Pandora, they own SoundCloud, they own a bunch of stuff that they're really. I think they're going to take it to Apple and Spotify. I really do. I think as people compare the prices, now that they have a lower tier price structure, for $10 a month, they basically have Spotify now. And that's interesting. And now if you want to add all the car stuff, it costs you more. But, just on the streaming, they're on par with Spotify and Apple Music now. So, I think that I don't know. They have what Spotify and Apple have, and then more, and that is interesting to me. One thing that I've told you about Apple over the years is I love it because it just works, right? I pretty much use Apple products plus one other thing in that category. And I've been trying to get it down to just one other thing. And weirdly, on the business side, I don't use anything Apple. On the consumer side, I don't use almost everything Apple plus a thing. On the business side, I use Google and Microsoft because they're two 800-pound gorillas. But I use the Microsoft cloud because it comes with all the Office stuff. And I can see the day where I get rid of that too. I don't know where I go at that point. Is it all Google? Does Amazon introduce something? Open Office? I don't even know where that is anymore. I don't know who owns it. I think maybe Amazon owns it. But you take a look at what's going on in the world, and the one thing that you can say pretty convincingly is anywhere that you see an oligopoly or a monopoly, get involved. And Sirius is the up and comer in the music and streaming oligopoly. I think that they're going to eat a lot of the smaller services, and I think they're going to compete with Apple and Spotify. And right now, they're dirt cheap. Spotify and Apple are not, but this one is. And you got Daddy Warbucks over in Omaha buying up the stock. So there's a lot of support. All right, everybody, have a good day. I am off to San Jose tonight. I have a meeting in Palo Alto. Why would I have a meeting in Palo Alto? And then I'm off to San Francisco for client meetings, and then to Dallas for a couple client meetings, and Packer game with my cousins. I am currently scheduled to be back in town next Tuesday. I am going to try to come back on Monday, so we will see how that goes. All right, everybody, have a good rest of the day.